We're into the mid-afternoon on Wall Street, and it's time for another quick reset. I'm Mercer, this is Storm Stock Solutions, and let's bring some clarity to the chaos in today's markets. The tone this hour is steady but selective. Index-level action is relatively muted, but under the surface we're seeing some interesting rotations and storytelling trades take shape as investors position ahead of Thursday's key inflation data. Let's start with what's new. According to fresh reporting from MarketWatch, emerging market stocks have been quietly trouncing the S&P 500 this year, in what they describe as one of 2025's biggest surprises. That's a big narrative shift from the last decade, when the US dominated. The discussion now is about whether that outperformance can continue. Think cheaper valuations, higher growth, and in some cases, benefits from global supply chain routing. This emerging market strength is now a core talking point on trading desks that were previously laser-focused on US megacaps and AI on the macro front. The story hasn't changed, but the clock is ticking louder. As Jeffrey Bartash at MarketWatch highlights, inflation was already rising before the government shutdown, and Thursday's delayed CPI print will tell us whether things have gotten worse. At the same time, the jobs market data has cooled. That combination, cooling labor, still hot prices, keeps investors guessing about the Fed's next move. This hour, the focus is on whether bond yields drift as traders fine-tune their rate cut odds going into that report. In terms of strength, one theme that's perking up is income and value. Philip Van Dorn at MarketWatch is out with a piece on 10 of the most loved dividend stocks for 2026, many yielding 4% or more. A lot of those names are in energy, an area that's been beaten up as oil prices slid this year. Analysts he cites see the potential for a tremendous rebound in that group. For professionals, that's a classic contrarian setup: high yields, weak recent price action, and the possibility of a cyclical bounce if the macro backdrop cooperates. We're also still seeing travel and leisure in the conversation. Southwest Airlines is holding its spot in the headlines after pushing to multi-year highs, powered by renewed optimism about U.S. airlines next year, and Barclays' call that profitability could improve meaningfully into 2026. That's notable because it suggests consumers are still prioritizing travel, even with inflation concerns hovering in the background. On the sleeper side, there are few stories worth watching in the background rather than trading off of in the next 5 minutes. One is Meta. Emily Berry's piece at MarketWatch highlights Meta as a headliner on Rosenblatt's list of top first half 2026 stock ideas, alongside under the thwart are names like Applied Optoelectronics and Magnite. That reinforces the idea that, even as attention drifts to emerging markets and dividend value plays, the market is still very interested in ad tech and high Java tech and adjacent growth stories into next year. Another under-radar development. Andrew Keshner reports that Ray Dalio is the latest billionaire to commit money to Trump accounts for kids, government-backed investment accounts slated to launch in 2026. That's not a near-term trading catalyst, but it's the kind of structural policy shift that could influence long-run household participation in markets, inflows into equities, and ultimately, how the next generation invests. And then there's Oracle, still on some watch lists after its recent slide. Christine G. at MarketWatch notes, new worries about stalled data center funding, but at least one analyst calls those fears almost irrelevant to the bigger story. When you see that kind of disconnect between narrative and fundamentals, analysts and portfolio managers take note, even if price action stays choppy in the short term. Into the next hour, I'll be watching 3 things: whether emerging markets outperformance continues to attract flows away from US benchmarks, how income-oriented energy names trade as that high-yield narrative circulates, and any early moves in rates or volatility as the market braces for Thursday's CPI. All of that will set the stage for our closing bell wrap later today. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Mercer. Stay sharp, stay steady.